Wade Comeaux. Hello, everybody. Wade Comeaux with Catalyst Funding. Very excited to have Steve Davis and our regular guest, Jeff Johnson, with us here today. Steve, great to have you back. And I know you have a pretty big event coming up, right, at Total Wealth?
Yeah, we do. We've got our expo. Thank you for asking.
Yeah.
Yeah, we do this twice a year. There's 400 people there. And this particular one, we're celebrating India. So what we're going to do is of course, the subject is how to use real estate to build wealth and a second stream of income, both actively and passively. And we've got six incredible speakers that will go over everything from apartments to city centers and how we're building those and producing cash flow. People need to be aware this is a free event, and we train from 8 a.m. to noon. We break at noon for lunch. We're going to have Indian food. If you don't like Indian food, we've got tacos. We've got Indian dancers, Indian music. It's
Wow.
going to be a lot of fun. So we're going to study hard from 8 to noon, and then we're going to have a lot of fun and networking afterwards. And they can go to totalwealthacademy.com/expo, totalwealthacademy.com/expo to reserve a seat or seats. I suggest you bring your spouse and kids 13 and up. Get those kids learning this stuff
Mhm.
early, and they are welcome. And you can pick your meal and reserve your seat there.
Yeah, we sponsor every one of these expos that Steve and his team have ever since the day they opened, and every one is a blast. Like it starts off like it's the work hard, play hard philosophy all summed up
Yeah.
in one like morning and after early afternoon because tons of great content in the morning, just tons of great speakers. You really get energized. It's like you walk away more excited about real estate investment, but also a lot more knowledgeable. Then the crowd is great in the afternoon, early afternoon after lunch. Great food. Always have a couple great drinks. I think your son normally has a couple beers that he makes on his own there, which are always
Yep.
awesome. So it's just a lot of fun. Great event. If you've not been, make sure you go. If you've already been, you know how great it is, and I'm sure you'll come again.
Thank
Uh,
you.
Yeah, for
any,
sure. Because
anything
you
else going
here,
on
that's a
big
big.
in TWA land?
Say that again. I'm sorry.
I'm sorry, I might have spoken over you, Jeff. I was just asking, is there anything else big going on with TWA that you want to let everybody know about?
Well, the thing I'm most excited about are these city centers that we're building. Um, if you're not familiar with a city center, there's one at I-10 and Beltway 8 in Memorial City
Hmm.
area.
Hmm.
Mhm.
There's in Cinco Ranch. Uh, there's one, but these are huge. You know, the one that we're building right now is, I believe, 27 acres.
Wow.
It's got a clock tower. It's got a dog park. It's got a family park. Some of them will actually have movie theaters, apartment complexes, commercial. It's insane, and I'm super excited about it because when you build them from the ground up, your profit is a lot higher.
Mm, for sure.
Where's it going to be?
Ellison,
Oh,
right over off of 99, before you get to Bridgeland,
oh
heading
wow.
north.
Oh, okay.
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 That's awesome.
Yeah.
Yeah, I think you're talking about the one that's actually called City Center over on the west side of town, right? Is that the type of
Yeah.
Yeah.
project you're talking about? Yeah. Okay. Yeah, that's amazing. And you're looking for investors, I guess, to participate in these opportunities. Is that right?
Yeah, this one is full,
Oh,
but
okay.
as soon as this one is complete, they're going to build another one.
Okay. Yeah, that's great. So you'll be able to learn about this event on Saturday and then get ready to participate in future events if you want, right?
You got it. You got
Okay.
it.
That's awesome. That's awesome.
Yeah.
Well, I know you guys are have locations both here in Houston and of course in Dallas. If you're interested in learning more about Total Wealth in either of those cities, it's definitely a great opportunity to not only learn a lot about real estate investment from their mentors, but also to network with other serious real estate investors. So it's one thing I like about Steve's groups is they bring a lot of other people who you can exchange ideas with, find out what's working, what's not working. the community is one of the biggest things about TWA, in my opinion.
Yeah, I think that there's a joke out there from Les Brown. He says, if you hang out with 9 losers, soon you'll become the 10th.
Mm-hmm.
But the good news is, if you hang out with 9 millionaires, soon you'll become the 10th. So a lot of people are joining Total Wealth Academy so that they can hang out with millionaires and multimillionaires and learn what they're doing differently to build that type of wealth.
No doubt. Jeff, I'm sorry I cut you off earlier, my friend. What were you going to ask Steve about?
My question was more self-serving. It was about the beer. Is
Okay.
your boy picking the beer from India? Because
Yeah, he's going to have an Indian Pale Ale.
he's very talented.
It's very appropriate to have an Indian Pale Ale. That makes a lot of sense with Indian food. It's going to be a perfect match for
Be
sure.
careful; those are dangerous.
Yeah. All right. So Steve, you know, you've been on several of our shows, so I think most people know about you. You are the CEO of Total Wealth Academy, mentored tons of people that we work with to great success, and really good at working with new investors. But is there anything else you want to tell us before we move into the meat of the presentation?
I think that's it. Those are the 2 main points. But I would love everybody, if you're in the Houston area, or really if you're in Texas, get down here. This expo is phenomenal. It's the one I'm always excited for the expo, but this one's got me the most excited because of the list of speakers.
Yeah, it's great. And I will say, whenever, you know, we get people who sign up at these events, and there's a significant amount of people that come from San Antonio, Dallas, other areas.
Yeah.
So don't let the fact that it's not your hometown slow you down from attending, because it's that good of an event. And there are other people in your community that are going to be there already from San Antonio, Dallas, Beaumont, etc. So there's going to be tons of people that you want to meet.
Yep.
All right, let's dive into the next slide. The disclaimer, of course, the information that both we are given and Steve is giving today is purely for informational purposes. You should not make investment decisions based on our opinions. You should go out and do your own due diligence. Real quick on the Catalyst value propositions, a couple things we do want to emphasize today. We are your one-stop shop for hard money and permanent financing loans. So we offer the hard money to purchase and repair distressed real estate, but also a wide variety of conventional and DSCR loans. Those are debt service coverage ratio loans. So if you're out there and you think, I don't have the W-2 income or the consistent income to hold cash flowing real estate, you're wrong. On DSCR loans, we look at the property's ability to pay. And as long as you have reasonable credit and you have a relatively small amount of assets, you also can hold long-term real estate. So if you want to learn more about any of those products, be sure to reach out to the team at Catalyst and we'll be happy to help you out. Steve, I know that you are in Houston and know the area well. What do you see in the Houston numbers?
Well, I'll tell you, you know, you look at the days on market, that's fast. That means that thing's under contract within a couple of weeks. If it's, you know, because the 48 days includes getting it under contract and then getting your mortgage and closing the deal. Things are selling quick. I know you were talking about, you had some deals you just put up for sale and they sold within 24 hours. I think, now remember, this stays on market is stuff that is listed with a real estate agent.
Right.
These pocket deals are going even faster. 24 hours, 72 hours, they're gone. These good deals do not last. So, but I am seeing, not just talking about the numbers, my members are doing more deals recently. So, and I think that's partly because of your help. You know, you've helped our members find some deals. They're just more out there than people are aware of because all they're looking at is MLS. Well, there are many other sources to locate deals and they're out there and people should be aggressively looking. If you're a real estate investor, you need to be aware that deals are being done and a lot of them.
Yeah, we're gonna cover that in a slide a little bit later on that talks about a national trend of fewer fix and flip deals being done, but the margins being greater. I think
Wow.
Jeff and I talked about this on a previous call where there are fewer people who are doing deals at the moment than we've seen in the past, but the good people who have experience, they've been through markets like this before, are more aggressive right now, and their margins are better. Candidly, we're seeing out of pocket on both flips and fixed to rents that are much lower than they've been in the past. So people are able to do a lot more deals with a lot less cash out of pocket. Jeff,
Yeah.
do you
But
yeah, go
I
ahead.
think there the rates going up over the last couple of years kind of shocked everybody, and a lot of folks was held back. And I think they went down a little bit, but it's just more normalization than anything else. I think there's some pent up um, demand to buy these properties and to get into the game. And I think the longer we go, the more people are realizing, hey, the rates are what they are. There's still good deals out there, and people are coming into the market, is my opinion. So to your point earlier, Steve, um, you need to be creative and be aggressive in how you're looking for your deals. You can't rely on just MLS. That's a terrible idea.
Yeah.
If you have some, even if you just because you're competing with everybody. Right? Everybody looks at MLS. Everybody looks at HAR or whatever the relevant one is in your city. But a lot of times you're competing with end buyers. So if properties aren't that bad, um, you might be competing with somebody who wants to buy that house and live in it. So everyone's looking at MLS. You need to diversify your search group and get hooked up with as many wholesaling companies as possible. Talk to organizations like Steve's who develop relationships with realtors or wholesalers. Um, just it doesn't hurt to get as many at bats as you possibly can because you never know which one's going to be one. All it takes is one or two a year. A lot of people want to do a couple a year. Some are aggressive; they want to do 10, and that's great. But if you're just looking for a couple flips a year or a couple rentals you want to add a year, all it takes is one. So just get on as many of these lists, go to as many networking events as you can to meet wholesalers. I think a lot of people get into wholesaling. Maybe they don't have a good buyer's list. They don't know how to get rid of these properties. So you could be that guy or girl for these wholesalers. Just get out there.
Yeah, for sure. I do want to correct one quick thing, and this is not Steve's fault. It's a data error on our part. We had a little bit of a fat finger on the days on market. It's actually 58. So it's a little bit north of where it was in February of 2024. Apologize for that mix up, everybody. But you can see in Houston, it's, relatively flat days on market from this time last year. And then still down from February of 2019 and that in the middle of that COVID era back there, like whenever it hit. And then you look at the months of inventory, it's up a bit. So you are starting to see a little bit of slowness. We have been averaging 4 or 5% average sales price growth. It's down just a touch. So maybe a little bit of softening in the market here in Houston. You definitely see that. But one thing I'm hearing, and we were working with a wholesaler the other day that was going to work with us on placing some deals, and she is making offers on deals that are on MLS because there's a lot of inventory right now. So that does present an opportunity. She's offering significant discounts to the price that it's at on MLS if it's out there for 60 days, just making a lowball offer. Not ridiculously lowball offer, but low enough to where she can still make a spread on the deal and is having some traction. So one of the good things about a little bit of a softer market is it does present some opportunities for investors.
That's a great point because just because a price, just because a property is priced at a certain number, if it doesn't make sense, no one's going to buy it at that number. You know what I mean? Like if you have a price listed at $200,000, but for an investor, there's just no way to make money or have it be a good deal at 200. Offer what makes sense. Offer that 180 or 175. It may seem like a lot, but math is math, and the projects are going to cost what they cost. Don't assume that if the price is 200, well, that's what it's going to be. There's a lot of deals, and I look on HAR sometimes too. But there's a lot of deals that are listed at 200. And you look at the actual price, they'll sell at 150, 160 sometimes.
Yeah,
So don't
for sure.
assume that the price that it's listed at is the price that it's going to happen at, because you, just like any other investor, you're going to look at the deal and say, this doesn't make sense. I can pay X.
Yeah.
Yeah, and these people need to be mentally tough and not be afraid of rejection and
Mhm.
do what Jeff just said, write the offer. it gets turned down, get turned down again, get turned down again. And then the next one you get. But if you never wrote those offers, you didn't get that one. So don't be afraid of rejection. Be tough. Accept the rejection and just keep going, keep writing those offers and see what happens.
Yeah, it's a numbers game. I think that these people will send out, a lot of them, they won't even visit the properties. They'll throw the number out there. They'll put a short option on it. It's worth it to pay an inexpensive option. Get out there with your contractor. If you're experienced enough to come up with the repairs budget, you know where you're at. But you have to make those low ball offers, and you have to make a lot of them because, to both of your points, not everyone's going to be accepted. That's a guarantee. But you only need 1 out of 20 to be accepted, and maybe that's the deal where you can really produce a great profit, right? So it is a numbers game for sure. All right, let's go to the next slide. And in Dallas, Steve, I know you and Total Wealth Academy have a location up in Dallas, so you know a lot about this market. Whenever I'm comparing it to Houston, the especially in the recent 6 months or so, Houston has performed better than Dallas. Prior to that, Dallas was crushing every major metro here in Texas. But you see the average sales price up 1.5, median up 0.7. The days on market is a good bit longer than Houston, and the months of inventory, I think, is a little bit less. So it's a pretty similar story overall, as far as just the timing and the appreciation over the last year. Although the price point, that average price point in Dallas is so much higher than it is in Houston. It's almost, 80 some odd thousand bucks higher. So that's a pretty big difference on that average sales price. But anecdotally, what is the team at Total Wealth seeing up there in Dallas?
Yeah, the we're still buying properties on the outskirts of Dallas,
Yeah.
the little cities that surround Dallas. Uh, we've even got members buying in Waco, Amarillo, that are living in Dallas.
Yeah.
So we're not seeing really anything, a lot of deals in Dallas, but in the surrounding, the bedroom communities, yeah, we're finding quite a few deals.
Yeah, I think that's the common thread.
The number that jumped out at me was I will say, and Steve, I know I would consider you an expert, especially in the apartment space. The rents in Dallas are down a little bit. I mean, overall, historically, over the last 6 years, they're still up. What is that, $700 plus? But they are softening a little bit year over year in Dallas. Houston was a little bit positive. Still not quite the huge jump. I mean, Houston's up maybe $500, or Dallas is up 7. Any idea why you think the leases in Dallas, the rentals, are starting to soften a little bit?
That's such a small percentage. I don't know if that's just because it's MLS. MLS is, the slowest, and they don't always get the highest prices compared to leasing it yourself. Like when I had 100 houses, I managed those myself, and I was beating MLS when it came to my average rent. But I don't see that being even worth, Jeff, that 2.9%. I don't know if that means anything unless we see another 2.9% next year.
Yeah. Yeah, I think you got to look at the trends a little bit. I mean, the number that's really telling is up 44.9% over like a 5-year period, right? That's pretty,
Yeah.
6-year period. That's pretty amazing. But and the thing that's crazy about that is only how much the rents are up in totality. If you look at what the cash flow is up, it's got to be incredible, right? Because let's say you're cash flowing $200 whenever you first bought it, whenever the rents were 1,700. Taxes and insurance have gone up some, but they haven't eaten up that $800 difference over that time frame.
Yeah. The other thing I was thinking about was the days on market. And while, yeah, it's up 61 versus 70, if you're a flipper, just think about that. It's just an extra 10 days of interest. It's not the end of the world. But the good news is that the prices are still high. Like if you're flipping properties, when those numbers start crashing, then I'd be a little nervous. But the prices are staying at or slightly above. Like you said, the 6-year number is ridiculous, Um, so yeah, you factor in an extra 10 days of interest on your hard money loan if you're a flipper. It's still a very robust flip market up there, in my opinion.
Yes. And most of the deals our members are doing are flips because there's too much equity in them to rent them out. It's just dead equity.
Right. For sure. Okay. So for San Antonio, um, Steve, I know you guys had talked about maybe opening up an office there. I think that may be on hold a little bit at the moment. Is that right?
Yeah, we're probably looking at Phoenix for our next office.
Oh, cool. Very good.
But I still love San Antonio.
Yeah. Yeah.
I think that it's that days on market is shocking. Um, I know that we're leasing them in a week or so. Now, this is sales, of course, but man, people are moving in there. We're getting 15, 20 phone calls, when we put a rent property up for rent. Um, yeah, to me, it's a great place to invest.
Yeah. Almost every month. We don't have that one this month, but there's some national or Texas prognosticator saying that San Antonio is one of the best markets. And whenever we get to the end of this report, looking at the affordability index, it's easy to understand why, because San Antonio is incredibly affordable compared to the other major metros in Texas, but also even more so compared to the rest of the country. It's really incredible when you think the amenities that a city like San Antonio has, but it's still incredibly reasonably priced. Um, as far as the trends here, we're seeing in the numbers. This is the first positive average sales price that I remember in a little while. I think it had been down slightly for some time, so that's a very good trend. The median sales price is not up, but the reduction is less than it had been in the past. And you know, I think there's still a little bit longer days on market than you'd prefer to see, but the months of inventory, I think this may be better. Did it move ahead and is better than Houston now? Or sorry, dead even. So
4 4 4 4.
yeah, yeah. So you're starting to see some better trends in San Antonio. It makes a lot of sense because I do think it's a very affordable area. It did have a slowdown. I think it was kind of, you know, pulling off some positivity early on from Austin whenever they were just crushing it. Whenever Austin slowed down, they slowed down a bit. But I think the ship is starting to turn around there in San Antonio from what these numbers show. Jeff, what are you thinking?
I was saying the only thing because in my mind I think San Antonio is really going through it. So it's a rough time, but it's not. If you look at 2019 numbers, Houston, which we all consider Houston steady, safe, solid market, right? The pre-COVID number, Houston on average and median is 38 and 30%. San Antonio, 37 and 30%. It's the same. It's just I think they've had a little recent dip, but if you look over the long haul, it's just as consistent as Houston, which we all consider a pretty solid market, right? So I think there's maybe a little recency bias with the negativity in San Antonio, but overall, it's still very strong. To your point earlier, Steve. Also, I feel like we'd be remiss if we didn't mention anytime we're doing deals in San Antonio, mention the strike team. If you're doing a project in San Antonio, go through them, get permits. If you're outside of the city limits, double check, but you don't have to. But if it's in San Antonio, go through the process. It's if you do it right, and Wade, you can speak to this more than I can, but if you do it right, it's not so bad. It's
Not
just
bad at all, really.
yeah, if you do it right, you get the permits, you go through the process, you keep them involved. It's not that difficult. It's when you try and get away without doing it, and you get caught, then it is the nightmare scenario. So when you're dealing
And
with your property in San Antonio, get your permits, go through, do it the right way, and you'll be fine.
Yeah, and you could get caught anywhere theoretically, right? They're old school inspectors that drive around town and they see a dumpster in front of a house. They may come up and ask you questions and maybe red tag you, but it's on steroids in San Antonio because they look at the MLS listings for both sales and leases. And if you didn't, it looks like a brand new property and you didn't pull permits, it looks like you did a lot of work. They will often come up and red tag you. So it's on steroids from the normal scenario. Don't assume it's how it is in either Dallas or in Houston or in Austin. It's a very, very different scenario. And the good news about it is if you're an in-town or out-of-town investor, you spend a little bit of extra money. You have a second set of eyes from a city inspector that's making sure things are done right. And you have a home that's properly buttoned up. But if you go to sell it either as a flip or at a later date, if you hold the property as a rental for a couple of years. So in the overall scheme of things, it's a relatively small amount of money and a lot of improvement. But even more so than Houston and Dallas, there are fewer investors out there right now, and the investors are getting really good deals there in San Antonio. The ones who know how to manage it are doing really well. Yep. Let's look at Austin now. So, for those of you that remember, I know Steve, Jeff, and I were doing some of these monthly market updates during the height of COVID, and Austin was the hottest city in the entire United States. Everybody, every tech firm was moving over there. Every home was getting multiple cash offers, 10% above list price. It was just nuts. And then things had pulled back. If you look at, being up 45.8% over that period from 19 to 25, you go up to Dallas. Dallas is up 58.6% over that time frame. But Houston still is not up as much as Austin, even with that pullback. So Austin had one heck of a run on the median sales price. It's been a lot slower, but it's not as bad as it was for a while. There's a hot minute there where I think I saw one month where they were down 15%, which is huge, year over year. So it's definitely stabilizing. The days on market aren't as bad as they were for a while. Although the months of inventory, I think, is the highest of the major metros. So it's definitely slowing down a bit. But Steve, I don't know. You probably do some multifamily over there, probably not a lot of single family, but are you guys doing any deals in Austin at the moment? Anything that you're bringing to the members?
No, not that I'm aware of.
Okay.
Yes, on the apartment complexes, but again, those like in the Dallas area, it's on the outskirts of Austin. The
Yeah.
little bedroom communities and the city surrounding Austin where we're getting the best deals.
Sure.
I just noticed the months of inventory, 5.7 months. That's a balanced market, pretty balanced.
Yeah, six months is equilibrium supposedly, so they're right up against that, which you haven't seen that in any Texas major metro in a while. So
Yeah.
yeah, the over exuberance there in Austin definitely slowed down over time. Still hanging on though. It's not, it got stabilized. We saw this one chart maybe 6 months ago or so, Jeff and I, maybe with another guest, but Austin is back on the long-term, like 20-year appreciation trend. It went way up and it came back, but now it's just really back in line, which it is a higher appreciation trend than any of the other major metros, but it just had to come back to a little bit more of a normal trend.
Yeah.
Anything to add to that, Jeff, before we wrap up all the major metros?
No, sir.
Okay. Jeff, on this report here, what were you thinking about that? The rent stabilization.
Yeah, so I'm kind of curious. I'm curious to Steve's opinion, but basically what it says is, 2024, the markets, the insurance costs, the first time it's declined since 2017. Now, that's good. With that said, it was a very small decline, and it's you can probably speak to this better than I could, Steve, but it's almost at an all-time high. So the cost of insurance for these multifamilies is pretty high, but I think it was good news in that it's the first time in 7 years where it's not getting worse. It's starting to go down slightly. So how has the insurance costs affected your people's ability to buy properties? How their properties are cash flowing? Has it been a major problem, or is it much ado about nothing?
No, it's been a major problem for certain apartment complexes where the insurance literally doubled. But it's helped us in the purchase of apartment complexes because it's reduced the net operating income on these properties that we're buying, and we're buying them at a discounted price because of the insurance. And then if the insurance does drop, we've still got that NOI. And then the NOI goes up. And so the property value goes up. So it's one of those yin yang situations. Yeah, it sucks if you own one and they double your insurance, but it's helping us get better prices as we're buying more apartment complexes, self-storage, senior living, and things like that.
That makes total sense. I mean, anytime there's any kind of disruption, it's good for the buyers, right? Regardless of what it is, insurance, multifamily, if you foreclosures for single family, it sucks if you're in one, but if you are looking to be a buyer, it's an opportunity if you see it the right way and act accordingly.
Yeah. I had actually met with someone who markets some of their apartments through Total Wealth, and they had developed a self-insurance platform, and I think they were saving a significant amount. So I know those things only take place whenever there's a real need for it, right? Because you do take
Yeah.
on some additional risks there. But I know that was a good solution for some people that was working out pretty well. I will say, in addition to that, I've heard some relief in the single family area as well. I know a lot of the people on the call today or the web call today are single family investors. And we are starting to see relief in both of those categories, which is very welcomed because just like it's been a bit of a challenge in the multifamily area, it's definitely been an opportunity for improvement in single family as well. So this next slide. Just talking about timing, we are going into peak time of the year. If you're a real estate investor and you want to get a great opportunity, most people look to buy homes in the summer if they need to change school districts, etc. That's a great time to do it because the kids are out of school. So if you're wanting to do great on a flip, it's a really good time to get into the market right now. This report shows some of that data, talking about how in Austin, Dallas, San Antonio, and Houston, and the country as a whole, the best times of year to sell. It's interesting to me. The second half of March has been really good for Austin. That almost seems a little bit early, but I guess it's normally in the first half of the summer whenever people are like, "Hey, I want to get my place. I want to have time to move, get the kids settled, and get them ready for school." So I thought this is an interesting chart in that if you want to do it, it's a great time to catch that large premium in the months of May, April, probably even into a little bit of June, because some of these say second half of May. Anything to add to that, gentlemen?
Yeah, the thing I love is, and this is just more anecdotal stuff about finding deals. My wife said last Thursday she wanted to find a flip house. We found one 2 days later, wrote the offer. That thing is going to be finished by the first week of May. So we'll be putting it on the market in May. So this is really good news.
So it wasn't necessarily a strategy, but it was an exciting chart to see, right?
Yeah, nice to see it.
Yeah, for sure. All right, this next slide, Jeff, I know you were interested in this one, talking about the fix and flip activity and how some positive things out there. What do you see here?
So there is another chart that I wanted to should have asked David to put on there. That's my bad, but it's basically the profits over. If you look at just home flipping, you have two numbers you look at: gross profit and ROI, right? Basically starting in 2021, for the last 2 years, the gross profits had been declining on flips, except for last year. Last year they went back up. So historically, over say the last 20 years, dollar profits are at an all-time high. But with inflation, with everything, it's really more about your ROI. Now, ROI, any idea you think when ROI peaked in the last 20 years? The 10, 11, right? When the financial crisis, when it was so easy to pick up properties for next to nothing. So flippers were making a killing back then. Dollar profits weren't as good. And over the last 4 years, ROI has been dropping, except for the last year. It started to turn back up. So I think it's good news for flippers. Like I said, the dollar profits are still at a close to an all-time high, but the ROI is starting to go on the upswing. And we talk about that a lot when you're buying, just anecdotally, when you're buying even rental properties, right? Everyone looks at cash flow and says, "Oh, I used to make $500 a month cash flow, and now I can get 200." Well, that may be true, but when you're getting $500 a month, how much out of pocket were you on these deals versus now, right? It's not always about the dollars; it's about your ROI. You might be able to buy 3 properties for the price that it took you to buy one when cash flows were good. So it's just kind of another reminder of don't focus so much on the dollars. Focus on what you put in versus what you get out.
Yeah, and I think if you look at the bottom, this equates to a 29.6% return on investment. That is way off, because if they come to you and they use a hard money loan that you guys provide, they may only have 35 grand in the deal and they made 72 grand. That's a 200% ROI,
Yeah.
not 29. 29 is assuming you paid cash for the flip. The real, by using Catalyst and leveraging yourself with a hard money loan, you can take that 29% rate of return and turn it into a 200% rate of return.
Absolutely. And that's definitely not broken down here, but that is the pro move. You know, investors, no matter what category, Steve's doing huge city center developments or whether he's working with single family investors on any end of the spectrum, the people who make the real money use leverage. Now, it's a cost of doing business, no doubt about that, but you're allowed to do more deals, or you can keep that other money invested in other categories. You can be doing passive deals with Steve, you know, on these city centers or on apartment complexes, or you can be doing multiple flips simultaneously. The right answer is to use that leverage for sure. This next slide is interesting, and I know Steve has been talking about this for a long time, but it's interesting that for the first time in a long time, Texas overtook Florida with the nation's top state for net migration. Steve, what are you feeling out there in both Dallas, Houston, across the state on that migration, and what do these numbers tell you?
It tells me that rents are going up.
Yep.
Rents are going to go up in all the categories in Texas. 137,000 newcomers. That's wild.
It's crazy, right?
I mean, you talk about the wild, wild west. This is an example of that. But when you look at Texas and how productive it is and how good for business it is, people are going to continue to want to move here and get out of these states that are taxing them to death.
Yeah. Taxing them to death, over regulation, a lot of different reasons to move to a state that's more business and income friendly. Keep more of the money you make, right?
Exactly.
Yeah. Uh, Jeff, this next slide is also interesting.
Yeah, I was say that kind of what you were talking about, Steve. The rents are going up. This is the
Uh,
fastest growing counties, right? Since what 2020, I guess for the last 4 years. Harris is number one by a mile. Like it's really not
Wow.
even close. 100,000 net growth. 64 is the next closest down in Miami. So, I mean, you look at Harris County, look at Collin County, that's the DFW area. Montgomery down there at number 9, Houston area, Tarrant, Dallas area. Um, I think it's just simple supply and demand. There's going to be a lot of demand for housing in these markets. And to your point, Steve, prices are going to go up, whether that be real estate costs or rents. There was a question in the chat about how about single family deals in Dallas. I think there's your answer. Like there's going to be deals in Dallas as well. Now, you may have to go tertiary to find good deals, but there's going to be a demand in all of these places just because of the sheer growth, right? There's no way around it. Things are going to get more expensive.
yeah, it's good to get ahead of the curve, right? Because we haven't seen those huge increases in rents yet. Rents always lag home price appreciation. That's just the way it's always been. But more people move into town, you know, leases are often on 12 to 24 months. So there are people that stay on those lower price leases a little bit longer. But I do think we're going to see a boom in these rent rates over time, especially in these areas where there's so much migration. So, we're talking about Dallas and Houston in particular, and all the people moving there. And you look here, three cities landed in the top 25: Frisco, Georgetown. So Frisco is in Dallas. Georgetown's a little bit north of Austin, and then Conroe's a little bit north of Houston, of course. What's really interesting is Steve was just talking about this. People going a little bit further out. Not in downtown, and that's what all of these communities are now. In all candor, Frisco, so much has moved up towards Frisco. It's kind of like the Energy Corridor or Katy, where it's like a pretty major area, but it's still not downtown. So you're seeing these very desirable areas being in suburbs where you have jobs in your local community, jobs downtown that you can go after, and just a real high rate of home price appreciation. Great. Anything else on this one, John?
Not for me. No, it's more the same.
Jeff, what are you seeing on this cities with the highest inventory? This is a different take.
Yeah, this is a little different. These are towns that we don't see a lot of we don't do a lot of action in. Number one being Killeen, but it's basically a market of pre-pandemic available properties versus now. So you look at Killeen, for example, they're number one. They had 1,300 in February of 18. Now they're at 2,200. Now the one that was on there that I was interested in was San Antonio. San Antonio had 7,200 active listings, and now they're at 10,000. That includes New Braunfels as well, which is definitely its own little market. But it's you have more options as a buyer in these markets. So if you're looking to do buy and holds, especially, that means there's some inventory out there. So kind of what we were talking about earlier. If you're a buy and hold investor and you're looking for a project, seems to be there's a lot of properties available. Like you do what Steve was talking about. Just make a ton of offers that make sense for you. You don't need just because, like I said, just because a price is listed at a certain price doesn't mean you have to pay that price. Offer what makes sense for the deal. Don't offer what the price is. But it just tells me that there are opportunities there, say in San Antonio, in that market.
Funny, we do a mixer regularly with clients and some of our other sponsors. Steve and his team are often there. And there's this one couple that I see just about every time, and they buy 4 to 6 houses a year. They really focus on areas like Liberty, Dayton, and that's exactly what they do. They just lowball offers out that have been on the market for 90 days. Lowball offers, consistently buy properties, and very consistently do it with almost little to no money out of pocket on both the hard money and the refi. It takes them some effort. They have to drive a little bit to look at the properties, but with very, very small amounts of money, they're getting cash flow properties in an area that's pretty stable, in low cost homes overall too, with good rent. So I do think that strategy works out really, really well, especially if you're willing to go a little bit further out, where the average investor is thinking, I want to be inside the loop, or I want to be inside the beltway. And that's just a mistake in many ways, to be limiting yourself to those areas.
Yeah,
So
I
this,
use an hour circle. I'll go an hour in any direction from my house, but I'm not going to go past an hour, because then it becomes a pain in the butt to take care of your properties. But I do an hour circle. I used to do a 30-minute circle.
That makes a lot of sense. We do see some people that live in areas where they just don't have the opportunities to have single family rentals that do deals remotely. And if they have good contractors and they fly down a little bit to check on them from time to time, they have people do FaceTime, they can be successful, like from California or New York. We have a couple people that do that, but you really have to make sure you build out your team, that you do regular draw inspections. You don't want to save them till the end. Just take the contractor's word for it. That's whenever people make mistakes. Take advantage of the inspection process and have people that you can really trust if you're going to do it from out of town.
If you're an out of town investor, take a bunch of draws.
Yeah.
I can't stress it enough. I'm sure every contractors are great, but you take a bunch of draws to make sure that a party that is more aligned with your interests, i.e. your hard money lender, make sure that the work is being done, it's being done correctly, and a good quality, so you don't get upside down on your project. Take lots of draws. It's okay. It's worth $175, I promise you.
Yeah, just a little pro tip there. Most contractors are going to want to pay their people once a week. Therefore, they're going to want to be paid once a week, right? So you should set it up to where you tell them, I don't pay once a week. I pay for work completed. You submit your work completed on X date. Maybe it's Wednesday. I'll pay you the following Wednesday. Maybe it's Friday. I'll pay you the following Friday. But you should be a conduit for money. You should not pay contractors, especially if you're out of town, without having an inspection done. They need to understand that you need to see by a third party that the work is done. And candidly, if they can't float things for a week, is this a contractor that you really want to work with? You're not talking about that much money. They're paying these guys a couple $100 a day, typically, and they should be able to float things for a week. It should not be the end of the world if you need to take a week to get your inspections done.
Yeah, I agree with that.
Yep. Okay. This next slide is really interesting too. It's talking about the highest rental return rates in the country, and how everybody's kind of comparing. And you look at it, not everybody's necessarily investing in Odessa, McAllen, Brownsville, or Corpus Christi, but those areas have some really strong numbers. But if you're just looking at being way above the average rental yield, you got some other markets that are in that not dark green but lighter green that are some of the areas that everybody's really looking at. You got San Antonio, much of Houston down to Galveston, Beaumont, uh, my former neck of the woods. I guess that's right. Orange, Texas, or Vinton, Louisiana. I'm not sure, but one of those two places. And then also all over Dallas, right? All over Dallas, you got the green colors there. So, and I think that just goes to show that the returns are pretty darn strong in all of the areas. Other than you got some areas that are, I think, associated with Austin, where you're having some real challenges there. That dark red and then some orange.
Yeah, that line, that I think that ring of orange circles is basically driving from Austin to Dallas, right? That's just straight up, what is it, 35? But to your point, like if you look at, like we do a lot of deals outside of Dallas. So you look at North Dallas, you start looking east. Same thing with Houston, right? You go a little south, a little east. Those are, you get some really strong deals. Really, the only trouble spot I see, I'm assuming that's Austin, is Austin, right? Everywhere else is pretty solid.
Yeah. Yeah. Good stuff there. All right. One thing that we always look at is a rental vacancy rate, and it is trending up. Uh, it's great whenever you don't have a lot of vacancy, but the vacancy rates historically are still very good. The only time whenever the vacancy rates were lower is in that period whenever rates were absolutely through the roof. 70s to early 80s rates were somewhere between 12 and 18% throughout most of that period. So believe me, everybody was wanting to rent. Rates are 12 to
Yeah.
18%. It's not an easy time to buy a house. So if you think about it, for rental vacancy rates to be as low as they are right now has been pretty darn good, but it is upticking a bit. It's still, I think, well below the historical average. Steve, what are your members seeing in that rental vacancy space? Do they feel like they're turning them around pretty quick? And what techniques do you think they're using to turn them as quick as possible?
Ask that again. I'm not sure I heard that.
Yeah, I was just asking about your members. Like, what is the feel for rental vacancy rates? Are they having longer vacancies, and if they
No,
aren't, like, what
yeah,
are they doing to
good
avoid that?
question.
Yeah.
No, 7 to 10 days to get them leased is pretty standard. If you don't lease that quickly, it probably means you've either overpriced the property or you didn't do a good make ready. In other words, you're trying to lease a piece of crap. But if you've got a perfect property and you're at the average rent, it's 7 to 10 days in Greater Houston. I'm not sure Dallas, but yeah, I mean, one guy, I joked about this earlier, 15 to 20 phone calls within a few days of putting an ad in the green sheet.
Green sheet. I know that's still a thing, huh?
It's still a thing and it's very effective.
Really? Did not know that.
You know what? One other thing I'll say to Steve's point, and this is how we do it on our portfolio, because in another company, we own a pretty decent sized group of rentals, is that if we don't get at least in 10 days, we automatically do a minimum $25 reduction in price. And then we consider 50 based on activity. And here's why. If you think about it, 25 bucks a month multiplied by 12, that's a $300 difference, right? But if you're talking about rents, that's, let's say, 2,000, 2,500. If you miss an entire month, you're losing so much more money than that
Right.
25 bucks or that 50 bucks. It's not worth it. To Steve's point, if it has in least than 10 days, the market is telling you something. It's that either you need to get in there and do a little bit of cleanup, maybe some touch up paint, maybe something that you didn't do the first time, or you need to adjust your price. But if you're at, let's just say the average rent in the neighborhood's 2,000 and you tried to be a hero and get 2025 or 2,050, just get it down to that 2,000 number, right? Because that might be a mental block for some people. Agents might only be pulling 1,750 to 2,000, and they're not seeing your property for a lot of people at that price point. So don't get overly fixated on getting the highest absolute number, because in a year it doesn't make that much money. What you want to do is get them leased fast.
Yes, the velocity of money.
Yep, for sure. Jeff, what are you seeing on this rental vacancy rate for Texas? Any big differences between the national numbers and the Texas
No,
numbers?
I looked at it. It's the same. I mean, I think Texas acts just like any other market when it comes to this. They are, I think they're a little higher, to be honest. Like Texas is, what is this, 9%? And like, currently we're in the high sixes. So there are more rental vacancies in Texas than there are in the United States. That tells me that that's probably because it's easier to get a home in Texas. It's a little more affordable. That's my guess. But I imagine that's going to get gobbled up pretty quick with all the people that moved in. It seemed a
Yeah.
little counterintuitive, to be honest with you, to have a higher rental vacancy in the market that has all the people moving in. So I'm a little confused by it, but my guess is because it's just easier to buy a house in Texas than the rest of the country is my guess.
Probably makes sense. Um, so Jeff, I know you're a little closer to the action on interest rates than I am, but what is the interest rate trend? I know they had a slight decline the last couple of weeks, but what are you seeing in the interest rate trends at the moment?
Yeah, I mean they're keeping bouncing back and forth, right, between these half point. Honestly, I don't focus on the rates as much because, like we've been talking about forever, if you're an investor, it's all about how you buy it. It's all about the buy. If you're buying a good deal, rates will go up, rates will go down. They'll probably eventually go down from here. I don't see a big spike in them going up anytime soon. So in the short term, I would guess it's going to get better before it gets worse over the next 5 to 10 years. So you're going to have more cash flow along with a natural increase in rents. We have a lot of people, if rates dip a little bit more, a lot of people are going to consider pulling cash out to do more properties. Right? We have a lot of folks that do that, and it's real easy to see how taking money out of your properties and going and deploying it to buy 3, 4, 5 more houses, you can really change your entire financial future and your families by doing something like that. By sacrifice, I have a 4 or 5% rate. Okay, fine. Now I'm gonna have a 6.5 or 7, but I'm also gonna buy 5 more houses. And 10, 15 years from now, when I have those 5 houses still, and the equity in them is through the roof, I'm going to forget what my rate was back in 2024 because I'm going to have all these properties, right? So as an investor, don't get caught up focusing solely on interest rates because it's not even close to the most important thing in your buying decision.
Yeah. One thing I am optimistic about in the area of rates is that there's an unusually large amount of short-term debt that the U.S. Treasury needs to refinance. The previous administration did a lot of short-term bonds and totally changed the normal mix of short to long-term bonds. So there's a ton that had to be refinanced later this year. And the reason why that's important is the current administration is very focused on getting those refinanced at the lowest possible rates. So they have a lot of incentives. So we aren't paying a lot more national debt than we are at the moment. So I do think that there's a lot of optimism to see some lower rates in the second half of the year because all of this refinancing that the U.S. Treasury needs to do. So I hope to see some relief in the second half of the year. And it's not just because of the interest rates that they said, it's also because of the desirability of the bonds. The spread is very high right now above what the Fed is lending money out at and what mortgage rates are. So I think there's two factors that could really help in the second half of the year. So I'm optimistic about that. All right. I think we've got just a couple more slides left. We'll hit right before the end. This one report shows the most affordable state is being, a very affordable state being Texas, and two of the most affordable counties being, Harris County, Collin County, and two cities being Woodlands and Plano, which just kind of goes with this ongoing thread. A lot of desirability for Houston, Dallas, and some of the other parts of Texas. I did want to get over to the affordability index before you wrap up. It's a report we always love to look at. And Jeff, I don't know if you see anything particular jumping out there, you or Steve. I had a couple of thoughts, but I want to give you guys the first at bat.
No, I mean, it's obviously pretty consistent. Dallas, Houston, Austin, not a lot of change. Dallas and Austin kind of flip flop here and there. But no, there's just a lot of good opportunities, especially like I said, San Antonio down there at 71. I always talk about it, how it's basically got a lot of the same amenities as a large city, but yet it's so affordable relative to the other ones. So no, that's all I got.
I know I say this every time, but when I look at these people paying 70% of their income for a house, 95% of their income on a house, that's just destroying people's lives. People are foolish to be living in those areas.
Yeah, it's crazy. Two things that do jump out to me, and Jeff, you alluded to it, but the flip of Dallas being less affordable than Austin, that's a pretty big change. Those have flip-flop. But the most incredible story to me, and I think the reason that a lot of national prognosticators are saying San Antonio is such a great market, look at this. Back in March of 2019, San Antonio was the 49th least affordable city, 49th least affordable. Go to March, and you're talking, it goes down to 69th. And where is it now? 71st. So that is a really big story. And then you look at San Antonio income, it's dead even with Houston income, dead even, right? What's it cost to buy the average home there in Houston? $368. What's it cost in San Antonio? $269. Talking $100,000 less with the same income. So I'm looking at one city where I say, wow, home prices have a long way to go up. It's definitely San Antonio, because we're not talking about, no offense to Beaumont or Waco, where you don't have sports teams, you don't have lots of entertainment, restaurants, things to do. Like San Antonio is a major city. There's a lot of stuff to do there, and it is incredibly affordable relative to the income. So for those people that are out there thinking about investing, I still think that's a fantastic area. Steve, we're up against it. We may have a couple questions, but is there anything you want to wrap it up with before we go to any potential questions?
I can't really think of anything. I'd like to get to the questions.
Okay. David, do we have any this week?
Yeah, so excuse me. So one question that we did have, so and if you guys want to talk a little bit about it, where in kind of these major metros, Houston, Dallas specifically, are you seeing the most deals happen, maybe in certain areas or certain neighborhoods for people to look out at?
I think it comes down to price range. If you go out and find the neighborhoods where the homes are selling between $250 and $350, there's the hot spot. And those subdivisions where the houses are priced like that are all over the place. So there's no one area to look at. I look at price range. If I can find a neighborhood where the homes sell for $250 to $350, I'm going to go patrol that neighborhood. I'm going to drive for dollars. I'm going to find deals in that neighborhood.
I'll tag on what Steve's saying there. I think if you are looking to be a consistently safe real estate investor, it's important to have multiple exit strategies. And if you're buying below that 350, maybe 375 number, you're not only limited to flipping the house, right? If the market turns a little bit, something happens, you can almost always convert that into at minimum, break even, but probably slightly to very positive cash flow property. And that's a very good thing because if you get stuck, something happens, you can always do that. You can always refinance it into a DSCR loan, conventional loan, whatever the case may be. So I love having multiple exit strategies. The other thing is that there's so many darn buyers at that price point. Most of the people moving here, they're all looking in that price point. They're not looking at the $1 million homes. They're not looking at the $750,000 home. So the number of people that want to buy that home is an enormous amount. Just a huge, huge group of people. So that's a great point, Steve.
I'll answer. There was a question in the chat asking about pulling money out. So yes, if you do a cash out refi, based on how much you owe, you are going to increase the balance on your mortgage. But just in the example that I'm looking at in the chat, I think this person had roughly $160,000 that they would be able to pull out. So yes, your payment will be higher and your mortgage balance will be higher on your owner occupied property. But let's just say you're spending what, $25,000, $30,000 of property when it's all in, you're going to be able to pick up 6 or 7 houses, right? So on the one house, you are going to owe more money and your payment will be higher. But if you're cash flowing on the 6 to 7 houses you buy, a lot of times that will offset it. At a minimum, owning 6 or 7 houses over the next 10 to 15 years, your wealth, your net worth is going to accumulate exponentially relative to what it would be if you just did nothing and sat on your low rate.
Yeah, and these are words I've heard at so many of Steve's seminars and coachings, is that you don't want to have that debt equity because it's not really doing anything for you, right? It's not making you any money. If you take advantage of that equity to make cash flow, then you're doing something wise with that. So the minimal increase in payment is really a cost of doing business to be a more serious and active real estate investor. Yeah. All right, I think that's a wrap. Just a reminder, everybody, if you are not signed up to go to this big event coming up with Steve and the team for Total Wealth Academy, the India focused mixer and event and training, definitely check that out. Steve, do you want to give everybody the info one more time before we wrap up?
Sure. If you want to reserve a seat for the upcoming expo, it's Saturday, April 5th in Houston. Go to totalwealthacademy.com/expo. totalwealthacademy.com/expo. You can pick your meal. You can even see who all the speakers are and reserve a seat for yourself, your spouse, your kids. Do it at totalwealthacademy.com/expo.
Excellent.
All
Thanks
right.
again, Steve. Thank you, Jeff.
Thank
you,
you.
David.
One more thing I
Steve.
just wanted to mention, we are going to announce Cindy Warner as the winner of our prize for today's webinar. So thank you, Cindy, for tuning in, and we'll be in contact and get that over to you.
Perfect. Thanks, everybody. Have a great day.
Take care.